Germany, along with Spain and Austria, is the only European country that has not yet recovered its pre-pandemic consumption levels. And it's not just consumption. No matter the metric you analyze, GDP, investment, they all point in the same direction. Germany is, as of today, the sick man of Europe. The days when German politicians could lecture the rest of the countries on how to manage the economy now seem almost laughable. Germans work the fewest hours, by far, of all the OECD countries and probably in the world. In Germany, calling in sick to avoid going to work is almost a national sport, and no, that's not an exaggeration. Ask anyone living there and leave me a comment. However, the truth is that this issue is anything but funny. And not just because economic stagnation is itself a major tragedy, but because the geopolitical situation is on fire. It is precisely at times like this that the locomotive of Europe cannot afford to run out of fuel. But that's not the end of it. Germany is not only Europe's locomotive, it's also its best factory. It is the country that adds the most value to manufacturing, far ahead of the second place. With its enormous GDP and manufacturing-centered economy, Germany accounts for 27% of all industrial production in the old continent. In other words, Germany is so large that a fall in its economy could drag the entire continent down with it. Moreover, it seems that this is not just a temporary recession caused by the current geopolitical situation, as there is growing evidence that Germany's problems are much deeper than they initially appeared. So, how is the German economy really doing? Is it just a temporary halt, or is the situation worse than we thought? And perhaps the most important question, what can be done to solve it? We'll explore this further. Hello to all the community of Finance for All, welcome to another video. German factories cannot operate efficiently because energy is too expensive. This argument makes a lot of sense. In just 20 years, cheap nuclear energy has gone from representing 30% of the energy mix to 0%. Its replacement, coal and gas, of which, even in 2021, more than half came from Russia. Gas prices rose significantly because, after the sanctions, Germany had to fully commit to processing liquefied gas from the United States, with all that this entails. The fact is that Germany still depends on gas, and this explains why, after the outbreak of the Ukraine war, the national industry consumed 0.6 terawatt-hours less energy each day. We're talking about severe losses in production, around 18%. Now, the impact of the rise in electricity prices is undeniable. However, we can observe that gas prices have dropped to a tenth of what they cost at their peak in 2023, almost returning to their pre-war levels. Yet despite this, German industrial production has not managed to recover its previous pace. If in 2008 everyone admired the flexibility and resilience of the German economy, now it seems that a single blow was enough to knock it to the ground. But let's not jump to conclusions too quickly. It's true that the energy shock doesn't explain the whole problem, but since the pandemic, there has been another major global event that has particularly hit the German nation. We're talking about China's aggressive export policy and the Euro-American response. Let's remember what we said earlier, the German economy relies much more on industry than that of its neighbors. And if we're talking about German industry, we must inevitably talk about automobiles. But not just any type of automobile, but combustion engine vehicles like those of Volkswagen, BMW, Mercedes-Benz, and Audi. In summary, the energy transition, the shift from combustion engines to electric cars, Chinese subsidies, and US tariffs have dealt a severe blow to this industry, and the Germans are not managing to react. During the 2008 crisis, China was one of the main reasons Germany was able to overcome the recession. Sales to the Asian giant soared, while German manufacturers made their way into the growing Chinese market. What happened next is well known. Chinese factories stopped manufacturing German vehicles to focus on domestic brands like BYD. We could say that the Chinese took advantage of all the investment and knowledge that came from the West to develop their own industry, an industry that also received very generous subsidies from the Chinese government. As a result, after a long period of stagnation, sales to China have started to decline sharply. However, it's important to add a nuance here, like with the energy issue, the basis of the problem is true, but the magnitude is much smaller than it seems. The increase in exports to China in 2008 was significant, yes, but it barely represented 0.7% of GDP at its highest peak. In other words, China's weight in the German economy remained relatively small. And the reason is easy to understand: German exports are extremely diversified. Sales of vehicles and parts to China have decreased, yes, but they have partly been replaced by other types of exports, like those going to the United States. In reality, the overall balance has not fallen as much as many suggest. In other words, China could be a major headache in the future, but that does not explain the deep recession Germany is in today. In the end, it's easy to blame problems on major events like these, and they certainly have some validity. But as we mentioned at the beginning of this video, it's possible that the collapse of the German economy has much deeper roots. For example, just look at its demographic pyramid. Of course, this is not a problem unique to Germany, but let me give you a fact to illustrate the scale of the issue. In Germany, the number of deaths has exceeded the number of births since 1970, over 50 years ago. Or, if you prefer a more indirect metric, the internet infrastructure in Germany has the same quality as that found in Romania. The German population is aging terribly, and numerous studies find a strong correlation between aging and loss of economic dynamism. In the end, many entrepreneurs are young, and without them, there are no new companies to displace the giants that have been at the top for nearly a century. Just compare the founding dates of American titans like Facebook or Nvidia with German companies, many of which existed even before World War II. And if you add to this the fact that, as we mentioned earlier, Germany is the country in the OECD, and probably in the world, where people work the fewest hours, then the stagnation of the giant becomes less surprising. So far, Germany has been able to kick this problem down the road through immigration. To give you an idea, between 2013 and 2022, Germany was responsible for nearly half of all net immigration to Europe, with almost 6 million people. But let's be honest, this immigration is mostly low-skilled. It's nothing like the wave of engineers and doctors who came to Germany after the 2008 crisis. During those years, the country benefited enormously from all this immigration, but now it's German engineers who are looking to move abroad. To give a figure, nowadays, Germany receives, in relative terms, between 5 to 10 times fewer skilled workers than countries like the United Kingdom, Canada, Denmark, and, of course, the United States. The reasons? Well, they're not very clear. Immigration laws are among the most open and permissive in the world, especially when it comes to skilled immigration. But it seems that these professionals prefer to go to other countries, either because they see better opportunities, taxes, or simply, who knows, maybe they're intimidated by the idea of having to learn a language like German. One way or another, the fact is that the country has entered a vicious circle. To face new challenges, Germany needs to attract young talent, but with such a severe economic recession, no one considers this country their favorite destination. However, that's not the worst of it. In Germany, most people prefer to keep their money in a bank account with negative real interest rates rather than invest it in the stock market. They don't even invest in housing. To give you an idea, only 50% of Germans live in their own home, compared to nearly 80% in other Western countries. For Germans, the riskiest activity they can engage in is buying government bonds. And all of this explains why, even though Germany is one of the countries that invests the most in R&D in the world, we don't see many disruptive innovations. This is because investors behave like the average German citizen, always playing it safe. And of course, without investment in disruptive projects, it's very difficult to adapt to changes. The pandemic and the trade war with China have been the sparks that ignited a problem that had been simmering for years. In fact, if we analyze the different contributions to industrial production, we will see that the most obvious problems are the lack of investment and difficulties with intermediaries. And related to all this, we pose another question: what are the best universities in Germany? Because if I asked you about those in the US or the UK, you would have no doubt, but in Germany? Its best university is in Munich, and it barely ranks 48th in a global ranking. That's quite low. In the US, universities are basically large laboratories where classes are occasionally held. In contrast, in Germany or the European Union, they are more like job placement agencies for civil servants, with very little connection to the labor market. This is not just an anecdote, but is it a coincidence that one of the most successful departments in European universities is the one studying economic degrowth? Yes, economic degrowth as a goal is not just a matter for hippies. European universities are dedicating a lot of resources to this questionable idea. Let's remember that public universities are increasingly aligning themselves with the dominant political agenda, and if we add the lack of qualified personnel to this, it becomes clearer why Germany had to pay a subsidy of $10 billion to Intel to keep it from leaving the country. And we're not only talking about Intel, but also about Tesla or TSMC, companies that have maintained a significant part of their activities in the German region thanks to economic incentives. Speaking of Tesla, do you remember the German car brands? Well, even combined, they don't have a market capitalization equal to the giant created by Elon Musk. Of course, if these American companies wanted to expand in Germany, they would face another major problem: the energy transition. The German economy depends heavily on CO2 emissions, with a per capita industrial emissions rate almost double that of France. And which country has one of the highest CO2 taxes? Exactly, Germany. This means that any industrial initiative that wants to solve the problems will face a significant obstacle due to the country's energy policies. But, it's not the first time Germany has been considered the sick man of Europe. In the 1990s, it also grew at a slower pace than countries like Spain or Greece. And you know what? It managed to turn the situation around. In these past 2 years, GDP has fallen less than industrial production, mainly because the industry has become more efficient. In other words, it is managing to do more with less. And regarding the energy issue, there are good news on the horizon. Decades of subsidies failed to eliminate coal from the energy mix or significantly increase the share of renewable energy. But a few months ago, a historic deregulation package was approved. To give you an idea, just 2 years ago, a wind farm with only 3 wind turbines required a report of more than 36,000 pages. But now, many of these procedures have been reduced to zero. The result is an unprecedented boom. Yes, the country is wounded, and the challenges it faces are enormous, but if history has taught us anything, it is that we should never, ever, count Germany out. But now it's your turn. Did you know about Germany's situation? Is this really a temporary problem or a chronic one? Will it manage to bounce back to lead Europe again before it's too late? Leave your answer in the comments. If you liked this video, give it a like, and we'll see you in the next one.